Today, we're diving into a really fascinating report from LVS Advisory about a company called Medpace. Now, it's a name you've probably never heard of, but trust me, they've been quietly crushing it in the high-stakes world of healthcare.
And when I say crushing it, I mean it. Since going public back in 2016, Medpace's stock is up over 1,100%. Yeah, you heard that right. That kind of performance is just staggering, and it makes you ask one simple question. So, how in the world did a company from Cincinnati, Ohio, a company that pretty much flies under the radar, pull this off? What is their secret sauce?
Well, to get to the bottom of that, we have to understand the world they live in. It's an industry with massive risks, unbelievable costs, but also the incredible potential to change millions of lives. To really get Medpace, you first have to meet the Goliaths of their industry, the massive drug trial giants who absolutely dominate the landscape. Just look at this drug development funnel. It is absolutely brutal. You can start with, say, 10,000 potential drug candidates to get just one that actually gets approved. The whole process can take more than a decade and cost billions of dollars. It's an unbelievably tough business.
So to manage all this risk, drug companies hire what are known as contract research organizations, or CROs. And as you can see, this industry is really dominated by four absolute giants. Together, they control about half the market, and their bread and butter is working with the biggest of big pharma.
But here's where things get really interesting. Medpace didn't even try to take on these giants head-to-head. Nope. They chose a totally different path, a contrarian strategy that, frankly, everyone else thought was just way too risky.
And this chart, wow, this one visual tells you everything you need to know about that strategy. The giants, they're fighting over that tiny little 4% slice of the pie. But look at Medpace. That huge purple chunk, nearly 80% of their business, comes from small biotech companies. We're talking about the Davids of the industry. And you have to understand what this means. For Medpace's clients, everything is on the line. I mean, a single clinical trial isn't just a project for them. It can literally make or break the entire company. It is a bet the farm kind of moment. So, if that's the situation, you need a very special kind of partner. And this is where Medpace brings out its slingshot, so to speak. They built a business model that is perfectly designed for these high-stakes clients.
You see, the giants mostly operate on what's called an FSP model. Think of it like a buffet. You pick and choose the services you want. It's very transactional. But Medpace only does FSO, full-service outsourcing. They become a true partner, managing every single thing from start to finish. They're not the buffet, they're the personal chef for the entire meal.
Okay, so you're probably thinking what I'm thinking. This FSO model sounds way better. It's stickier, it's more profitable. So why in the world are the big guys leaving all this money on the table?
Well, for the giants, it just doesn't make sense. The contracts are smaller, the clients are seen as financially risky, and honestly, this kind of high-touch, deep partnership model, it requires a totally different company DNA than what they've built. For them, it's just not worth the headache.
But here's the thing. What the giants see as a headache, Medpace sees as their entire reason for being. They didn't just find this niche. They engineered what the LVS report calls a better mousetrap, specifically to win it. And that mousetrap is built on three really strong pillars: a totally unique way of pricing their work, a relentless obsession with keeping costs low, and a very, very distinct company culture. All right, pillar number one, pricing. Think about it. If you're a small biotech burning through cash, the last thing you want are surprise costs. So Medpace offers a fixed price guarantee. And get this, to show how serious they are, the founder and CEO himself, to this day, sits in a 10 a.m. meeting to sign off on every single proposal. That's commitment. Okay, on to pillar two, their cost advantage. A huge piece of this puzzle is their in-house software system, ClinTrack. Instead of paying a ton of money to outside vendors like their competitors do, Medpace built and owns its entire tech playbook. That gives them total control and keeps costs way down. And don't let their focus on small clients fool you. They combine that in-house tech with incredible scale. As you can see from this map, they have operations in 42 countries. So they have the global reach of a giant, but the focus and agility of a niche player. It's the best of both worlds. And the final pillar, number three, is all about culture. You still got the founder deeply involved after 30 years. They have a strategy of hiring fresh grads and training them in the Medpace way, which means lower turnover, plus being based in Cincinnati instead of a super expensive hub like Boston or San Francisco keeps costs in check. It's an intense system, but man, is it effective.
So that's the strategy, a different game plan, a unique culture, a relentless focus.
It all sounds great on paper. But does it actually work? Well, let's take a look at the scoreboard.
And this is where it all comes together. The numbers here are just jaw-dropping. Look at revenue per employee. Medpace is generating over $100,000 more per person than its competitor, Icon. But the real knockout punch is that bottom line, return on invested capital. 65% for Medpace versus single digits for the giants. It's not even close. This is the proof.
So this all leads us back to the investment thesis from that LVS report. After seeing everything we've seen, what does this all mean for the future?
The argument from LVS Advisory is actually pretty straightforward. You've got a company here with a fundamentally superior business model. Then you combine that with the fact that the whole biotech market has faced some headwinds lately, and the report argues that this creates a really powerful long-term opportunity.
Which leaves us with this final thought. The incredible story of Medpace really makes you wonder. In a world full of giants, maybe the smartest move isn't to try and fight them at their own game. Maybe it's to find a different game altogether, and they become the absolute best at it.